Welcome to Uncharted Entrepreneurship, the show that brings you stories of trailblazing entrepreneurs. Get inside access to the minds of founders, partners, and visionaries. See how they find opportunity in challenges and take bold risks. They think big, act boldly, and make a real difference. Learn how they're shaping the future and making the world a better place. Get inspired to take action, believe in yourself, and ignite your own journey. Make your mark. Sponsored by EO Minnesota. Uncharted Entrepreneurship is a production of Content Basis, LLC. Copyright 2024. Subscribe and download today wherever you listen to podcasts.
Welcome to this episode. Today I have George Kalis. He is the CEO of Prospero. George, go ahead, do an introduction for yourself. Tell us your day-to-day role and one of your passions in life.
Great. So I'm George Kalis, and I started Prospero AI about 5 years ago. And we've just been doing a lot of work on taking, what are institutional grade signals that came from, my long time on Wall Street. I started at my first hedge fund when I was 17, and really figuring out a way to make the markets more accessible and easier to understand for everyone. So we've invented a lot of signals to make that process easier, as well as a educational process around that. And I'd say, my broader goal kind of fits with my current job very well. And, I'd like to see, and I think a lot of us would, a more fair world out there. So, this is just one approach to it, but there's a lot of different ways to do that. And I do it personally and professionally.
That's awesome. How about passions in life?
Oh, I mean, that was, like pursuit of fairness was, that was supposed to be the passion, but also a very big, I would say, a sports and game theory fan, and like to do a lot of like hobbies around that, I would say.
Game theory. I love that. All right. So before we get started, I'm going to just tell you a joke. All you have to do is tell me if the joke, or I'm sorry, all you have to do is give me a rating 1 through 5. So here we go. Fun fact, koi fish always travel in groups of 4. If attacked, koi A, B, and C will scatter, leaving behind the decoy.
I didn't see the decoy thing coming, so I like that. I'll give it a 4.
All right. Thank you very much. Yeah, we used to do the free joke project, but I had to explain it too much. And so the 1 through 5 makes a lot more sense. All right. So I love what you said in the beginning about just fairness. And I know that the GameStop story kind of started with a non-institutional trader kind of going up against the big guys. Give us a little bit of your background in that, in how you got started doing that.
I had a very interesting experience with it because I at the time I was building Prospero, doing that and starting to build out some of our signals, especially our social sentiment thing. And I actually learned about GameStop, and then I actually became an AMC investor. And if there's one thing I've kind of said to people the whole time, and I love how it started, by the way, like I think it's kind of its own brand of activist investing, protecting against companies being targeted by hedge funds or bankruptcy. All that's fantastic. But if there's one thing when I'm trying to educate people that I say there's one rule on Wall Street, you can't play from the same playbook. And that's not just retail investors. Hedge funds know this. If they're trying to do the same thing over and over again, other places will figure out how to exploit that. And I think that's the sad thing about what these meme stocks have become. I've seen a lot of exploitation, and I see a lot of funds making a lot of money on these meme stocks, short squeeze plays in general, where there's just a playbook now. They'll actually start shorting a stock heavily as they buy call options, and the retail investors will come in thinking, there's a Hedgies FUKT kind of moniker there. And while they think they're doing that, they're really just like setting up the hedge funds to make a lot of money on those call options as it goes down. And then when the air kind of gets out of it, they make even more money shorting it back down, buying those put options as it goes up. So I've got some hard news for people, that think these that they're getting the better of hedge funds. You're never getting the better of hedge funds if you just do the same thing over and over again. They're going to figure out the playbook. And right now it's really sad to see this retail experience where retail thinks they're getting the better of hedge funds when they're really just actually making them a lot of money.
Do you think it's going to be cyclical? And I mean, what I mean by that is there's going to be this time where AI is going to be sort of an equalizer, but maybe the big players are going to figure that out. They're going to start putting some ways to buffer that, and then it's going to be another way for the average person to kind of jump in? Or do you think right now we are going to democratize more and more across the board?
I actually think the number one thing for retail investors to remember, I mean, maybe other than what I just said, is that you need some common sense when you're looking at these things. And that's just one common sense example where it's just like, yeah, if you do the same thing over and over again, hedge funds are going to figure it out. But the other thing is like, I actually only see certain AI technologies as equalizers. I actually kind of see others as, making the product worse because it's diverting funds. And I think the perfect example of that is I don't think AI companies claiming that they can beat the market, like beat hedge funds, I don't think that's a very healthy process, because I think, we saw it in the last bear market when a lot of these like retail trading experts blew up. And in the next bear market, I'm sure we're going to see a lot of these AI trading platforms like blow up, because the bottom line is, and this is the example I always give, like if you think of a startup that hasn't even raised $100 million yet, how are they going to compete against a hedge fund like Bridgewater that could lose $100 million in a day, and they barely even notice that? That could just be a Tuesday for them. So I think that's a really important thing. And, one of the things that we focus on is this idea of tagging and visualizing in aggregate where institutions are, say, trading in the options markets. And I think that's a really different flavor of something, right? Where you can say like, okay, what's realistic? To me, that sounds like a realistic goal that we're approaching, not basically saying we're going to try to beat, Bridgewater or Two Sigma on a deep learning platform that we can only really put a fraction of the resources on. And this is actually coming from someone who spent 13 years in AI. My first take on an AI as a service, I was trying to build that. I had evolving neural networks with NYU, like ahead of like a lot of when people were kind of doing that combination of genetic algorithms and deep networks. So I've been around the block on this, and I think that that's the best advice that I could give anyone. If it sounds too good to be true, it probably is.
Yeah, yeah. So I want to dig in a little bit there. I do want to point out that AI has been around far before ChatGPT came out, right? And I have a friend that owns Lately.ai. It's a social media sort of platform that helps learn your tone, and they've been doing it since 2017 or earlier. Um, but I am interested in what you said earlier about just signals and trends. Tell us a little bit about what you saw or how you were able to see some of those signals around GameStop.
So one of the more fascinating things that we've seen in our signals was what we saw around GameStop in the most recent. I think it was like sometime in the spring. Um, but we actually saw spikes in net option sentiment, which is kind of like looking at short-term options markets pricing. And basically in aggregate, if institutions are paying more for calls above where the stock is trading versus puts below. So you're getting like a net like spend on that. And that's what you'd expect on a meme stock. But one of the things that we actually saw that enabled us to kind of say it was ending before a lot of other people is we actually saw that our long-term signal upside breakout that isolates calls above where the stock is trading in the long-term options markets. We actually saw GameStop on a scale of 0 to 100 go from 70 at close one day to 35 at open. And we never see that kind of scale thing happen. And basically what it was evidence of was that the short-term options markets became so crowded that institutions were actually betting on the event heavily in the long-term options markets. And that's where they exited because they were trying to be clever about not sending the signal. But, that's one of the many things that our technology was built to pick up. But that was a very interesting thing that we posted because we were pretty early in saying like, hey, we spotted this, like, maybe watch out. And the stock was still trading at 40 when we kind of saw that. And it was, I think by the end of the day, maybe at 30 or below when we kind of said that. So yeah, I think the main thing that I think is very important, and when looking at our signals or anything in AI, is that, that they're looking for something specific. Because I think anytime you're trying to like beat the market, it's very hard to interpret those, and it's going to be probably heavily pretty like non-linear and hard to interpret. But if you focus on, say, hey, here's a signal that is giving me a piece of information that is the same piece of information every day, it's actually going to be the market that tells you when things are changing. And I think that's the better approach for anyone, to have a toolkit of those kind of signals like ours and others, because it's going to be very, very hard to, beat the market on the trading floor. A lot of what you have to do, I think, where retail investors can shine is interpreting information and making smart decisions with it. And there's so many great tools out there to do that.
First, I have to say, is there a movie like The Big Short that helps us understand all these all the stock, like you said, meme stock, all the different terms and technologies? I thought The Big Short was such a good way to kind of help us understand the financials market. Is there a good? I know, and there's also a movie about GameStop, which I've seen. Is there a movie that explains everything you're talking about for the average user?
So there's some fun ones, and like, yeah, you got to hand it to The Big Short, by the way, for like putting models in bathtubs and explaining it. A very good way to get people to pay attention. I think margin call is very interesting, not only for the terms, but also to see how some of these like backroom deals happen. And I actually think the Wolf of Wall Street is another good one that is just like kind of gets you the terms, the interactions, things like that. That there's a funny scene, with like Matthew McConaughey at the beginning of The Wolf of Wall Street, and he does just like such a good job. And I'm just like, oh man, like they had some really good help on this. Like I've seen that kind of Wall Street character in like many different ways, and I think just as much as the terms, that's the best thing for people to educate themselves on. Oh, also the series Billions. I forgot it. By far the best. Like that gives all the mechanics about as well as you can see it, and the players. And I think that's the important thing. Like one of the things, another big secret on Wall Street is just that like the best traders know their opponents, right? It's like sitting at a poker table, right? So if you actually understand people in all those movies, that gives you like a kind of a good insight to how people think and how they operate. That's just as big of a favor to anyone as the terms.
That's good. In some of your notes I have here, you talked about fundamentals and momentum and how how they differ, and how your platform helps to see that difference in a different way. Not to use different too many times, but can you explain that a little bit?
So one of my favorite examples of like how to explain what we built is looking at the difference between NVIDIA and Meta in our signals. And Meta's like one of my favorite case studies, because it was actually me thinking I was smarter than the technology I built. When Prospero first had like 100 upside rating on Meta, it was trading at 172, 16, 23. And I remember myself being like, well, Prospero doesn't understand that Mark Zuckerberg's an idiot. And 2 months later, I like remember when I was like, maybe I'm the idiot. Like it's like here at 100, right? And the story that I always tell people about value investing and how to be a good value investor is that my first boss at my first hedge fund when I was still a teenager told me, he sat me down, he was like, the most money I've ever made was on a garbage company. And he's like, you got to look for the garbage. And to be very explicit about what that means, it's a statement of value, right? It's like if you think you have some kind of angle on something, it's because the market is undervaluing it, right? So that Meta example, Meta is still at 100 upside breakout. And I tell that story because we've been in Meta for a long time. We've taken it on a number of good runs, and it's just been on a pretty steady climb up for that time. During that time, NVIDIA, which is like in a short-term signal like net option sentiment, at times been way higher than Meta consistently. But in the longer-term signal, you're basically seeing that the upside has been sometimes in the 50s or 60s where Meta is at 100, right? And the best way I can explain that to people is it's just like sometimes when people are saying buy Nvidia, they don't understand the risk embedded in Nvidia. And I'm just like, I don't think anybody that's straight bullish or straight bearish, I don't think either of those people are right. Because to be right about that, you have to predict the future on like, relations between the US and China. And like, good luck doing that because basically on one of Nvidia's best quarters, 2 quarters ago, like they gained 233% year over year. And Jensen Huang expressed some concern over the relations with China, and the stock was down despite that amazing quarter. And I think that's just a really good way to explain how Prospero can lay out risk for people, right? You see Meta, which has been on this course up, right? That's 100 in our rating. So that's to say there's a lot more decisiveness that Meta is going to be bullish versus more like that 60% figure when you survey all of the institutions. And I think that's just like the best way how I can explain some of the ways that we, lay out this risk reward differently. And, we have fundamentals like profitability and growth. And actually, I love that story because NVIDIA and Meta look actually very similar on profitability and growth. They're above average in both. So you don't necessarily have to explain that away, but that data point is there to give people more perspective. Where it really changes is how certain the institutions are when they're betting in those long-term options markets. And I think that's kind of the difference between fundamentals and momentum right there.
Yeah, I think you talked a little bit about how some of these stocks are going high quickly. Is there a way to identify stocks like Meta? And I know that Meta is probably 1% of all the stocks, or less than 1% of all those stocks that are out there that have no value. Or I'll back up a minute. There's all kinds of stocks coming on the market that have no value, like other than what people think it's going to be. And I'm old enough to go through the 2000 stock market tech crash where everything was overvalued and all of a sudden it wasn't, right? Do you feel as though Prospero will then equalize that as well, so you can maybe find some of those stocks that have a better chance of winning, just like Meta? I mean, I guess Meta came on with a lot of momentum, but let's just say if I were to take a stock like Twitter, which is now X, is that going to be a great play if it goes back public?
Well, that's me speculating, which I try not to do as much as possible. If I can get it in the Prospero signals, I'm happy to do that. And there's a lot of layers to that prediction too. But what I would say is like Meta wasn't originally a momentum play. When it had high upside, right? It didn't necessarily have higher like net option sentiment or net social sentiment. That's what it gained as more people gained awareness of it. So that's one thing that we try to do, paint a complete picture with our 10 signals. And the nice thing about like what you're talking about in terms of like upside and downside, our two key long-term signals. Like what we layer into that is not only long-term options pricing dynamics, but also analyst ratings price targets, and then price momentum factors, long-term price momentum factors. And, for those that don't know, the highest significant variable in a single variable, if a stock is going to go up the next year, is if it went up the last year. So momentum and simple momentum like that can be really, really important. And just a good extra check whether you're using Prospero or not. So I think, not only are we trying to like paint different pictures and like, you could see social sentiment or option sentiment or other things that we're looking at like dark pool rating or short pressure, and all of that are signals that we use to paint a complete picture. But we also, we like to solve things in the micro and macro, and like that upside and downside rating have a lot of like kind of completeness into what they're talking about. So they're layering on all those variables. And, one of the things that we like to make very easy are things like someone's like, should I buy this stock? And I say, well, is the upside higher than the downside? If not, probably not, because there's a lot layered into those numbers. And I would say the only other thing is, our newsletter has been very successful. It's beating the market by about 50% the last 2 years and over 80% this year. And one of the things that kind of is important to what we've done is we've really developed a process, and we'll look at the same numbers every week and basically use a screener and just be like, look at the rankings. And what's nice about that is we've been in meta a lot, but at times we've dropped it if it falls in that screener rank, or if like the dark pool or short pressure gets too high. So we like teach people a process about that. But another thing that we do is, like, recently for a few weeks we got out on the stock like AppLovin. Hadn't heard of it at all, but we basically saw it like shoot to the top of the screener, and it like went on a nice couple week run. And I think that's kind of what I've alluded to in other things, where it's just like, at the end of the day, it's important to like have your process, right? And you stay consistent. And if you stay consistent, like, the market will tell you, what's, should be elevated and what shouldn't, or when you should have warning signs. And we've really just tried to create like a framework and a language around that. But at the end of the day, some people, I would say some of our most successful users are people that have their own processes that just like layer our numbers into that to like look for either confluence or to reduce errors if there's disagreement in sources.
You mentioned two things, well, fundamentals and social sentiment. Is the fundamentals the actual real things that make the stock happen, sales and things like that? And then the social sentiment is what people believe it's going to go or where it's going to go. Is that kind of the two different differentiators in that?
Yeah, so I think we have like our classic fundamentals, right? And those are going to be like our profitability rating, our growth rating, and we also have market similarity, which is just like us simplifying beta by, instead of like saying what a beta is, which is very hard to explain to some retail investors, you could just say like, this is how similar to the market something is. Those are going to be like classic fundamentals, right? And the nice thing is we're simplifying that by putting it on a scale of 0 to 100 with 2,000 stocks, right? I thought one of the toughest things about something like EPS is nobody really knows, or like a lot of novices don't really know where to situate that in the broader scale of companies. So I even think taking a classic fundamental like that and having a 0 to 100 rating is very helpful. Then you have, like, I would say our like short term, like more purely momentum and risk things like option sentiment, social sentiment, and then like, institutional flow, dark pool rating, and short pressure. That's going to be like all like, momentum and risk. Then you kind of have the other ones that I mentioned, upside and downside, which are kind of like, I would say those are kind of market proxies, right? Where you're looking for other people to like assess momentum and risk, right? So we're looking to analysts, we're looking to, options pricing, we're looking to like price momentum on the longer term. And we're just basically saying, look, we're just going to aggregate what a lot of like smart approaches do. And that's why upside and downside are kind of like the safest way for people to start. And, they were named in a way that can help people to say like, oh, if I'm just going to grab one piece of information, maybe I should know this is high upside or high downside. So that's like the way we try to like not only have these signals be in concert with each other, but also like where people at various levels of expertise can come in and maybe just like grab one piece of information that's going to aggregate a lot of the different techniques for them.
That's good. Thank you. So we have a few minutes left. As we close out, I give everybody a chance to do a shameless plug. And I know we've talked about Prospero quite a bit, but what's your shameless plug today?
So I would say that it was alluded to a little bit at the beginning. Like, one of very interesting things in our product formation is something like net option sentiment was actually invented because I was talking to a retail investor and trying to teach too many of them how to read options chains, and we failed. So that is all to say, I actually love teaching people how to invest. And whether you not use Prospero, you can go to prospero.ai and get our newsletter if you don't want to talk to me and you just want to learn on your own. But if you want to kind of learn from an expert that teaches a lot of people, I'm always happy to teach people one-on-one how to invest better.
That's perfect. And I will make sure.
George at prospero.ai is my email. Sorry to cut you off.
That's great. No, I was going I was going to say I'll make sure that gets into the show notes. And George Kalis, the CEO of Prospero AI, it's been very informative, and I thank you so much for being here today.
Thanks for having me on.
All right, we're good. Yeah, that was really good. That was Uncharted Entrepreneurship is a production of Content Basis LLC. Copyright 2023. You can find more award-winning content at contentbasis.io. And that wraps up the latest edition of Uncharted Entrepreneurship. Bold tales from entrepreneurial trailblazers. I'm your host, Brent Peterson, signing off after an incredible fireside chat with one of our intrepid trailblazing guests. Their first-hand perspective on conquering the unexplored wilds of business is just a taste of the rare wisdom you'll discover from pioneering entrepreneurs on this show. I also invite you to join me each week for insider commentary on the startup scene and digital marketing landscape on my Talk Commerce podcast. You can find Talk Commerce wherever you download podcasts or go to talk-commerce.com. I'd be grateful if you left a review and rating for Uncharted Entrepreneurship to help more bold founders find their way to game-changing insights that empower ventures to transform communities. This is your host, Brent Peterson, signing off for now. I'll see you around the virtual campfire next episode as we embark on another adventure into the great entrepreneurial unknown.